a very, very important day for the markets, and one that, of course, is a busy one as well. So I want to get your sense right up on how you're positioning yourself in this environment.
Yeah, hi, good morning. So I think just specifically on the risk of Ukraine-Russia tensions, we do have a recommendation to be hedging against a potential escalation on that front. And I think on that note, what we'd like to do is to be short the euro against a long in the Japanese yen. So I think from an economic perspective, if the tensions do escalate and prompt a further rise in oil prices, I think Eurozone growth outlook will be very much impacted. And the idea whether the ECB could even tighten could be taken off quite quickly as well. So I think on the downside potential, I think the euro, for example, against the dollar still has room to fall towards the 110, 111 level, which is about 2% down from currently 113. And the yen as a safe haven should also benefit. So as a hedge trade against geopolitical tensions, short euro yen looks actually quite attractive.
Teck Leng, Mandy made a very, very important point earlier on that I want to bring up, which is essentially that, if this situation it gets even more tense, then that, the outlook would impact global growth, and a large part of that story is oil. And so do you think that would really make the Fed rethink its own action and its own approach towards policy going forward?
Yeah, so interestingly, the market is bringing down the odds of a 50 basis point hike steadily over the last week or so, given the tensions has been rising. But I think the Fed actually has a pretty high threshold just because it is coming from a very low starting point with the economy already at full employment, inflation at a 40-year high of 7.5%. I don't think it will derail them from the first few hikes. So I think markets looking for comfort would probably not be would be disappointed. So at least the first 3 to 4 hikes is actually already in the bag.